to stop the diversion of oxygen to non-medical use. So hence we have to shut down some of the plants, or rather all the plants. But we have got a very active support by one of the major OEMs, and through their recommendations and through their help, we have been able to place an order on oxygen generators, and they are already being, I would say, manufactured, and it is expected to be commissioned by around June. In the meantime, of course, there has been some amount of leeway that has been given. In North, liquid oxygen supplies to our Noida plant has been resumed. Again, our aftermarket continues to give a stellar performance in our Phoenix Lamps division. Now I move to the domestic cable division. On the domestic cable division, while we continue to hold the pole position, what is very, very important, and I think we are proud of, is that we won the prestigious Honda Best Vendor Award. This was completely surprise and a very pleasant surprise, and it was a vindication for the focus that we have been giving on the increased business relationship with this key customer. But that was not all. This was coupled with a very similar honor from our very first customer, which is TVS Motors. So TVS Motors also gave us the Best Vendor Award. So this goes on to prove that we continue to deliver value for all our customers, be it new or our traditional supporters. We also got a recognition as a best vendor from Kubota. So overall, it has been an excellent year with good recognitions from the customers. Moving on to our investments, our plan to expand the capacity at Narsapura, primarily for Honda, has continued, but it has slowed down a bit, primarily because of the COVID restrictions. Our Naya Manesar project, which is basically to modernize our Unit 4, or the fourth unit that we have, has been completed, and it is being currently showcased to our customer in the north. Just apart from all the specific business units, our Suprajit Technology Center has moved ahead, coming out with new products, which is electronic instrument clusters, CBS or combi brake systems, and also the brake shoes. These are being well accepted in the marketplace, and particularly we have got some amount of success in the EV segment. I think with that, I'll conclude my updates. Thank you.
Thank you, Mohan. Medappa?
Yeah, thank you very much. Good morning to everyone. We have announced the financial results for the year and the quarter ended 31st March 2021. The consolidated revenue for the year ended March 2021 was 1,641 crores, as against 1,563 crores for the corresponding previous year, recording a growth of 5%. I'll go through the quarter-on-quarter comparison, since YTD numbers are not exactly comparable due to subdued performance in Q1 2020 due to COVID last year. The consolidated revenue for the quarter ended March 2021 was 513 crores, as against 389 crores for the corresponding quarter previous year, recording a growth of 32%. The consolidated operational EBITDA was 82 crores for the quarter, as against 54 crores for the previous year quarter, recording growth of 49%. Q4 2021 was the ever highest quarter in terms of revenue compared to previous quarters. The standalone revenue for the year ended March 2021 was 1,112 crores, as against 1,071 crores for the corresponding previous year, recording a growth of 4%. At standalone level, we have achieved a turnover of 347 crores for the quarter, as against 258 crores for the corresponding quarter last year, recording a growth of 35%. The standalone operational EBITDA was 58 crores for the quarter, as against 46 crores for the corresponding quarter last year, recording growth of 26%. We are also happy to inform you that overall the group debt level has reduced to 328 crores against 380 crores during last year, March 2020. For further queries, if any, on the results, you may approach me at any point of time directly, as usual, after this investor call also. Thank you very much.
Thank you, Medappa. I just would like to conclude from our side saying that The last year we started with huge gloom and doom thanks to the lockdown that happened end of March 2020. So the first quarter result was more or less disastrous. But the way we were able to claw back during the year, the next 3 quarters has been wonderful work by our team, which in the end we were able to actually clock a growth both on standalone as well as on the consolidated basis. In fact, on the consolidated basis, despite first quarter of pretty poor results, we are able to actually improve our margins from 14 to about 14.5%. So that itself is a wonderful performance, considering not only the first quarter being a write-off, but also the fact that there has been increase in commodity prices through the year, which you're all well aware. As far as this year is concerned, I think we have also given a commentary on the current quarter and in a sense of what's to store. The lockdowns are in various stages, in various states and in various customers. And we think that the first quarter would be, materially impacted, simply because business is at a very low key. How the rest of the year will pan out, it all depends upon how the pandemic pans out. So if the second wave gets over well and then enough people are vaccinated and the third wave isn't bad, then I think we still have a decent year ahead. But I'm concerned that with the vaccination levels where it is, and that typically the third wave comes maybe after 2-3 months, that would be the peak season for automotive business, that is September, October, November. If anything like that happens at the time, it could be something that could be, pretty bad for the industry. So we're all keeping our fingers crossed, but we are concerned that the pandemic is not under control still. Subject to that, I think we'll continue to do well. All I would like to conclude is by saying last year Indian automotive industry shrank by nearly 14%. Against that, we have actually grown by 5%. So we technically had a delta of almost 18-19% on the automotive industry growth, which is, I think is a very creditable performance. With that, I now leave the floor for questions. Moderator, you can please open the question and answers, please.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Ashutosh Tiwari from Equirus Securities. Please go ahead.
Yeah, sir. Congrats on decent numbers. So first question is that if I look at automotive cable margin this quarter, it dipped Q-on-Q from 20 to 15%. Obviously, 20 would have been abnormal margin. But if you look at
hear you properly. Sorry.
Just a minute. Is it better now?
Yes, please.
Hello. Yeah. Sir, if I look at automotive cable margins, it dipped in quarter-on-quarter from 20 to 15%. Obviously, 20 would have been abnormal margin. But if I look at it as standalone other expenses, they actually increased from 19 to 25 crore almost in this quarter on a Q-on-Q basis. Is there any one-off in that?
I'm unable to hear you. Can you slow down a little bit and come closer to the mic?
Is it better now?
It's better, but when you're speaking, it is disturbing. Okay, please go ahead.
Okay. So if I look at the standalone other expenses, it increased from 19 to 25 crores on a quarter-on-quarter basis. Any particular one-off in that?
You're saying the other income has increased, is it?
Other expenses.
Other expenses, okay. I think one of the reasons other expenses probably slightly higher is that please understand that one of the challenges the group itself has found during the year was to some extent extraordinary freight expenses. See, the shipment that normally goes by boats were all disturbed due to port congestion. There was a Suez Canal issue and all kinds of stuff. So we had to, resort to a lot of air freights to make sure that, because we are all single source for many customers. I think that is one, I would say, an element of expense, which was probably more than normal.
In the fourth quarter, you mean to say?
Yeah, it's in the fourth quarter too, yes.
And is that the reason why automotive cable margins dipped on a quarter-on-quarter basis?
Again, it's difficult to talk about quarter to quarter this dip, because the variation can be, there will be some sales reversal during the course of the particular quarter. Maybe to some extent the margin may also have been because of the material cost that impact that it must have had. So there are multiple reasons, but I think these one or two things are also will add, apart from the fact that there has been these freight issues.
And secondly, you mentioned that this Phoenix lamp is more impacted in the current quarter because of oxygen issues, supply issues. Yeah. So obviously we have very large share in aftermarket as well. So is it that other competitors as well will have similar issue in their plant, and that's why maybe in second quarter we can recoup some of the losses that we've seen in the sales, which we see in the sales in this quarter?
Okay, we are in the same boat as any other supplier of this particular product, but everybody needs oxygen, and they're all depending upon oxygen being supplied by Inoxes of the world. And we are now setting up our own oxygen plant, which probably should be in place in June. So I think we should be back to a reasonable level of production. But let me also say that the pressure, let me give the larger perspective that the oxygen produced in India, there are sufficient and enough oxygen available in India. There is no supply issue. There is no issue of meeting the demand, but there is an issue of supply in terms of logistics. Where the oxygen plants are and how do you supply to them. All of them have been sort of resolved by now, by road, by train. You hear of trains taking oxygen containers all over the country. So the pressure has come out from some of the key suppliers. For example, Inox has started supplying to us already. So the plants are back in normal. How has it affected? Yes, it has affected some production for us. But has it affected any of the customers? No, it hasn't, because most of them are anyway on shutdown. So we are now getting back to normalcy. So it did affect some production. So we'll pick up the production when things are needed. So if the rebound in the aftermarket, to answer your specific question, comes in, let's say, June, July, August, June will be still a month where we'll have to see how exactly lockdowns will be lifted. I think we'll be very well prepared. There's no problem.
Okay, so thanks a lot. That's all from my side.
Thank you. The next question is from the line of Deepan Shankara Narayanan from Trustline PMS. Please go ahead.
Good morning, everyone, and thanks a lot for the opportunity. Firstly, wanted to understand what is our expectation of US and European market performance this year, considering they are benign in terms of second wave of COVID. And also, are we seeing the status on new models of our new customers? Is it running smoothly or it is getting delayed?
Okay. In terms of new introduction, there has been some delays. SOPs have been delayed. The volumes have come down. But having said that, we have won quite a few contracts, as we have been saying in the past, in the last 2-3 years. One of the reasons we are able to continue to grow despite major disruptions in Q1 was largely because some of these new contracts have started its production cycles. So that has helped us to sort of be where we were, which will continue this year also. In terms of overall volumes, it is not just the COVID that is bothering the automotive industry. It's also this IC which Mohan just mentioned. If you if you are seeing the global news, both whether in US or in Europe, I think right from Volkswagen to BMW to GM to Ford, they all have sporadically shut down 1 week, 2 weeks, 3 weeks, this plant, that plant. So overall, the assumption is this year, let's say let's call calendar year, automotive industry worldwide will not grow. It will actually shrink. Whether it is 5% or 10% depends upon how these shortages will actually pan out in the next 3-6 months' time, because the general feeling is that through this year, this IC shortage will be there. It is not going away because there is an over demand and under supply. The capacities are full. So having said that, if there is no other issues, I think we will continue to have, because of this increased, what I would call as business due to new businesses, we should be able to do decently well.
Okay. And on India business, sir, so fairly we had a very low base last year on Q1 particularly. So are we guiding anything on that? So will we be meeting last year numbers, or will be lower than that?
Difficult to say, but all I'm saying that our April was reasonable. May is bad. June, it again depends when everybody starts scaling up. So overall, I would say that Q1 would be something like last year first quarter. Hopefully, a little better. I think it depends upon June.
Okay. So on these current conditions and commodity prices going up, so are we expecting some pricing get passed on to our customers, or are we facing difficult times to pass on the pricing to customers?
I mean, generally, in India, there is a recourse to customers. We are in discussion. We have got certain price increases still under debate. It's an ongoing, what I would call as, debate and, deliberations with the customers. Customers understand, because this time the price increase is not, 1%, 2%. I mean, the steel prices have gone up by something like 30%. And so are many other materials. So, I think customers are understanding the situation. There will be always a timing gap between the actual impact of price increase and the actual impact of when the material price have gone up. To that extent, there will be some, what I would call as a timing issue. But otherwise, I think, we are doing every effort to make sure that we get compensated. There will be always some difficulties at some point, but overall, we should be able to manage it, I think, for the Indian market.
Okay. Thanks a lot and all the best.
Thank you.
Thank you. The next question is from the line of Amit Hiranandani from East India Securities. Please go ahead.
Hi, sir. Thanks for the opportunity. Sir, first of all, many congratulations to the whole management team for the exceptional set of numbers in this tough time.
Thank you.
Yeah. Sir, my first question is basically the non-auto cable margin for the quarter is substantially improved. Just want to know the reason and whether can we sustain this high level of margin in the coming years. And on the other side, auto cable margin substantially dropped Q1Q. And any one-offs in it?
I think my basic answer would be that, I don't want anyone to go by one quarter number, whether it is for the automotive or for the non-automotive. There are various reasons. There could be some, for example, a pending price increase which got affected in that quarter, so it's showing in a skewed number. And also probably on the Q4 in automotive exports, we had huge, air freights that we had to do because of all the, what all happened in the Suez Canal up to all the, issues at the various ports. So that has also been a big problem. So I wouldn't go by a quarter. All I want to say, particularly on the automotive side of it, I think, 1 quarter, a couple of percent. But if you look at the whole year, they are more or less at the same level. I don't see much change on that overall scenario. Coming to the non-automotive, I think what I'm happy about is that, Westcon seemed to be turning around, slowly but steadily. I think last year is a year where they consolidated, they improved their operational efficiencies. Certain amount of new businesses have been won. So to some extent, I think the last quarter was a good quarter in terms of sales. When the sales exceed certain level, I think it also, obviously has its effect on its bottom line. So that did give a pleasant surprise for the quarter. That apart from, whatever the other thing that I mentioned. So is it a trend? I think overall, a non-automotive business which had been clocking lower margins in the past couple of years seem to have stabilized and seem to be only on the trend up. So, we are happy that it's in a good double digit now. So that is the idea, is to make sure that we continue on that path.
Great. And sir, can you please throw some light on the new products and any plans for getting into making EV products or potential opportunity on the table?
On the new products and EV opportunities, I'll ask Mohan to answer. Mohan?
Yeah, thank you. Well, let's split it into two different things. One is the new product. When I say new product, for example, brake shoe is a new product for us. You know that we have entered into the segment. We have got a very, very good technology in place. It's called the in situ technology, and we have already commissioned the plant, and we have done all the trials and commercialization of the plant is done. We also got our first major OE customer, and we have already started supplying to this OE customer. We have approached other OE customers for product validation and move ahead. In the process, we have also seeded that into the aftermarket, and we have started selling it in the aftermarket. So this is on our new product, which is other than, I would say, the cables and the halogen bulbs. In terms of EV segment, we are getting into a completely different ballgame here, and that is into the electronics cluster. As in the last call we were talking about that we have started our electronics division, and we need to migrate from our instrument cluster, which was mechanical instrument clusters, into electronics, and we have a very clear product roadmap, and we call it a Supra 1, Supra 2.0, 2.5, 3 at different levels of electronic versions, and some of these have already got good market acceptance. And here, very specifically, our target has been the EV space. So we are working with a couple of EV players to supply electronic instrument clusters to them. Other than that, we also have the combination braking system that again is being targeted with some of the EV segment two-wheelers.
Just to add what Mohan said, we are also working on electronic throttle controls for some of the customers' requirements. So Suprajit Technology Center, which is now been sort of augmented with more number of engineers. We have a couple of senior people joining the team. So we think that in the next 2 to 5 years' time, we'll have multiple products coming out and commercialized for the overall good of the company's future growth. Thank you.
Great, sir. And sir, can you throw some light on orders from Osram? Are we getting it for the European order and the aftermarket?
Yeah. I mean, Osram, there is a buyback agreement. In fact, without getting into the numbers, I can say that last year we exceeded their own requirement. Original buyback commitment, because they wanted more and we were able to deliver them more. And the understanding continues. The requirements are robust. We continue to deliver Osram's agreements.
Great. Sir, one last question. We earlier had plans to further diversify the non-auto division geographically as well as product-wise. So where are we on this plan?
Again, I'll ask Mohan to answer this question, geographic as well as product-wise. Yeah, on non-automotive.
Yeah, thanks. On the non-automotive side, we are very clearly again looking at electronics, like what Ajit was talking about. The electronic throttle control is one of the key products. In fact, this was being supplied already by Westcon to some of the customers there, but they were buying a lot of those equipments from or parts from other suppliers. So for that, we went in for a back-ended localization that we are going to do it here in India and supply it to Westcon, and through Westcon supply to these customers. So one of the key shift that has happened is going to be from mechanical control cables to electronic control systems. So we are positioning ourselves there. Other than that, there are quite many other devices like, for example, our gear shifters, which are again being positioned there in the US market, which will be back-ended produced here in India.
Maybe also on the gearboxes that we are working, maybe that would be.
Thanks for reminding. Yes, one of the key products that we have now commercialized, and it's undergoing a lot of testing by some of the OE customers in Brazil, is for a gearbox. This is an interesting product where we were making the cables for that, and we were supplying cables for that. Now, at the end of this, one end of this cable, there is a specific gearbox which goes for a seeding unit. That means to plant the seeds in the agricultural equipment. So this gearbox is something that we locally designed here in India, and we tested everything, and we have started seeding it into the Brazil market, and in the aftermarket it has already been given. But more importantly, for the OE market, it is being tested by one of the OEMs there.
Thank you, Mohan. And to add that in terms of, we are also looking from the non-automotive point of view to not only get into newer products, but also these are all the products that have been developed at the STC, Suprajit Technology Center. But to add to that, what we are also trying to do is to get into new customers with our existing products as well. That means cables and whatever we are currently doing. I think Westcon team, in fact, recently we had a strategy session and a 5-year plan. So we are very clearly focused on starting to, work now. Already some work has happened, which will make us to enter into some of the newer customers for our current products as well. So that is also been clearly rolled out. So in fact, I can say that first quarter, Westcon numbers are pretty good, largely because the efforts made to get into existing customer, newer business, new customer, existing business. I think both are starting to break the ice. So some of those orders that we have won in the last year is getting into production. So in fact, first quarter of this year, which is typically the lowest or the weakest quarter for Westcon, is turning out to be quite interesting from the point of view of sales. Thank you.
Thank you. The next question is from the line of Nikhil Kale from Axis Capital. Please go ahead.
Yeah, thank you for taking my question. My question was on the non-auto cable side. So
Sorry, I'm not getting you properly.
Mr. Kale, if you can use your handset, please.
Yeah, just a minute. Yeah, is it better now?
Yes.
Yeah. So my question was on the non-auto cable side. I think at the start you mentioned that there were a couple of challenges specifically in Mexico and also with respect to the sensors. So just wanted to understand, was there any loss of revenue because of these issues, or were you able to recuperate whatever revenues was lost by shifting the manufacturing?
Yes, the point is when you shift a Mexico production to Wichita, there is a cost, right? I mean, there is a cost issue. But we have not been able to, we have not let any customer lines down, and that's the most important part in our business. Could we have delivered more and, added another 500,000 sales? Maybe answer is yes. But we have been able to work with the customer so that we make sure that the lines are not down. We deliver somehow or the other on time. Largely because Mexico was actually started with red and it has gone to now orange, I think. So there is no other issue other than that. In terms of sensor, again, the customer is fully in the picture in terms of sensors. So, for example, a couple of our major customers, they know the problem and they know which suppliers are using particular sensor or the IC. And they work with the supplier together with us, and then they allocate, they budget the quantities depending upon their production schedules. Accordingly, we receive. Typically, we would have produced more and kept in stock or, send more to customer. That is not happening. It is going just in time. So we have been able to manage the customer so far. But then, this is as for the non-automotive. Whereas automotive, it's a much larger problem and a bigger problem. The customer has taken a decision on many occasions to just shut down the plant.
Okay, got it. And if I look at the annual margin, so I think the margin improvement has been very good from around 11% to almost 14.5%. So I just wanted to understand, one is in terms of our mix of production. So I think we were also doing a lot of direct exports. So how does it stand today? How much are we manufacturing in, say, Mexico, Wichita versus direct exports from, say, India? And how do we see that going forward?
Okay, you're talking about non-automotive, I think.
Non-automotive, yes.
Yes. So, I think slowly but steadily, there are more production will happen. I'm not talking about one quarter. Let's say I'm talking about next 2-3 years. I think quite a bit of the new business will happen out of India, number one. Number two, a reasonable amount of business will also happen out of ORS because delivery times are much shorter and customer is willing to pay a slightly higher price. So both are happening. So the business in essence, is not likely to grow in Wichita plant per se, but it will probably grow in ORS and India, I think. Yes.
Okay. Okay. So to that extent, I think margins would it be fair to assume that margin should remain in this region or maybe improve only.
What happens is that when you move the business to India, customer also knows it is made in India, so they are equally smart. So they also ask for a not the same level of pricing that we get at Wichita will come to the other plants. So it's a debate, but yes, currently I would agree with you that the products made out of India has a higher margin, and that's where the growth is. But customer keep on pushing for prices, so we'll have to see how it pans out. At the moment, yes, I mean probably one of the reasons that you saw some margin improvement as well in the last quarter.
Okay. And just lastly, would it be possible to maybe quantify some numbers or give us some numbers on maybe the order book that you have maybe on the non-auto side or even on the automotive cable? So that would be very helpful.
You can touch offline because we don't really get into this much of detailing in terms of providing the data. But I think some basic data I think Medappa can provide to you offline.
Okay, great. Okay. Thank you.
Thank you.
Thank you. The next question is from the line of Abhishek Jain from Dolat Capital. Please go ahead.
Thanks for taking my question and congrats for a strong set of numbers. Sir, as a retail sales is quite weak in two-wheelers and system inventory is high, how do you see impact in your standalone business in first half?
Question, Abhishek, can you please repeat? I got some problem to hear you properly.
Are you able to hear me, sir?
Yes.
Sir, as retail sales is quite weak in two-wheelers and inventory is quite high, so how do you see impact in your standalone business in first half FY21? And what is your revenue guidance for the core cable business for FY22? So can we see degrowth in the aftermarket business as well due to the disruption in distribution channels?
A little difficult to understand, but let me try to answer. You are saying about the, I think, OEM business, about the pipeline stocks and thing.
Yeah.
I think in terms of, okay, let me answer the second part. I think you heard it properly. If the aftermarket business, if the distribution, our dealers and distributors open up, I would think that, the business will be back to normal and, has been good last year when there was a reopening, there was a burst of business which came up quite nicely. It could again repeat for some time, but then will there be that much of pent-up demand like last year? I doubt it because, it has been a good year for growth. So there would be an uptick, but how much, I don't know. Secondly, I think the rural economy and rural distribution was good last year simply because the COVID didn't impact the rural economy. This year, I think it has impacted the rural economy. So I don't know what would be the outcome of that. Would it mean that there will be reduced sale of two-wheelers or whatever, as well as whether there will be, you're also in the same business, so your guess is as good as mine. In terms of OEMs, I think when we looked at March and beginning of April, there was a feeling that there was an increased pipeline stocks in the two-wheeler dealerships. And then, of course, the lockdown has happened. And some of the customers, as you know, have shut down their plants sporadically and, changes in schedules have happened. Now, how much is that stock? I don't know. There people talk about 6 to 8 weeks stock. If it is so, that is little bit on a higher side. So, I think, we'll all have to see how, somehow there is a feel of discomfort for me. I mean, it's more by a personal view, and I hope and pray that I am wrong, that this time the effect of COVID has been deep-rooted. I think we all would agree that somebody we know, some relation, some friend, some, has this serious effect of COVID. So it has happened also in the rural area. So how the economy will pick up and the business will pick up, I have a little more concern this time than the last time around because it impacted certain area and went away. This time it has got a deep-rooted impact. So will the economy really pick up and the two-wheeler or four-wheeler business will pick up? I have some concern. That's why we have been little conservative and little cautious in our outlook for the year, and I still hold that view.
Thank you. The next question is from the line of Viraj Kacharia from Securities Investment Management. Please go ahead.
Yeah, hi. Thanks for the opportunity. And first of all, sir, hope everyone at Suprajit is safe and healthy. And congratulations on such a remarkable performance in such a challenging time. So all credit goes to you and the team. So,
thank you, Viraj. Appreciate.
I just had three broader questions. I mean, not just looking at next 1 or 2 quarters, but if I were to look at, say, next 3 to 5 years. First is, if you look at 21, as you said, we have seen a considerable outperformance compared to the Indian auto production. And that is an outperformance we have been maintaining for last many years or decades. Now, if I were to look at next 3 to 5 years, where will that outperformance come to us? If it's exports, if it's domestic, if it's exports, based on the kind of inquiries or any color you can give, how's the inquiries, how's the conversion looking right now, or the pipeline looking right now, so that is one. And in relation to that, since the PLI scheme is now out and open, is there any benefit we can take and leverage upon? So that is one. Second is largely, as you said, we had seen some impact into the production, say, for Phoenix, and that is something which can happen to any company or supplier either in India or globally. But is there now a thinking which we are looking at in terms of de-risking the supply chain, not just in India, but probably at a global level? And how does that kind of equate with our value proposition in respect to the cost, which we have always kind of pride upon? So these are 2 broader questions I had.
Okay. It's I would say more generic answer than being specific. We have always outperformed the automotive industry. That continues to be our stand. We have always said that we will do 5 to 10% outperformance. With 5% growth this year in sales, which means it's almost like a 18-19% outperformance to the Indian automotive industry. Now, how will it pan out for the next 3 to 5 years? I think the growth will come. We believe that globally, it is my view and our internal view that there will be consolidation of vendors. You are right when you said the supply chain de-risking. Today, customers do not want 10 suppliers of cables. They want 3 or 4 who have the ability and financial stand to deliver them when they want, despite whatever the problem they have. So that's where we step in. And, we have done, as you know, in the past 2, 3 such acquisitions in this space. There continues to be opportunities. And we have already made that clear that we'll continue to look for such opportunities. That will augment our outperformance. That's number 1. Number 2, globally, we are still pretty small player. So I think the opportunities globally will come in automotive as well as in non-automotive business. I think to add to our strength, with Jim joining us, who has been in the automotive cable business for 30 years and led teams in the so-called global majors in cables, I think gives us a lot of strength additionally to make some more inroads beyond what we have been doing ourselves, to continue to go on this path of outperformance. So, this is where we are looking at on the cable side, and also on the even on the Phoenix lamp side. I think the kind of strategy we are striking with, whether it is with Osram or whether it is with Limulex, and our now ability to even deliver to the OEMs. I mean, we have last 1 year we have successfully delivered to a Chinese OEM, and we are working with some more. So all these things will, are new businesses for us. It is not the existing businesses. So that will all add to our ability to outperform the business. So I continue to believe that we'll outperform. And added to that, what STC is doing, I think we are still, we are not talking too much about STC today, but I think in another 2 years' time, some of the products that are in the final stages, Mohan talked about it quite a bit. Some of them can easily take off. So we have a lot of hopes in that. So all this will add on to our outperformance. PLI on the auto component industry, we are yet to study well. I think it has still not come out in clearly, so we'll have to see what exactly it means, and we'll see whether we can use it to our advantage for sure. Supply chain de-risking, it's a perennial issue. I mean, we always have managed to do de-risking of suppliers. We generally have two suppliers most of the times, and unless there is a reason to be a single sourcing. So we never had, as you know, we today supply to most of these customers something like either we are a 70% supplier or many a times a 100% supplier. So we have been able to manage the supply chain well, and we have a fairly good link within the supply chain to make sure that whenever there is, let us say, one supplier has a problem, to switch suppliers and manage the situation. So we haven't had that problem so far, and I think our team is well equipped to deal whenever such crises happen. I think we should be able to deal with that.
Thank you. The next question is from the line of Pratik Kothari from Unique PMS. Please go ahead.
Thank you for the opportunity, sir. So again, in continuation of your earlier comments regarding for the next 3-5 years, just wanted to get your sense on our preparedness to capture the opportunities which might come to us again over the next 3-5 years. And I ask this in the context that for the last 2 quarters, we are currently operating at almost full capacity that we have at optimal utilization. And the capex that we had announced last quarter only adds about 2 to 5% of the installed capacity that we have. So any major capex plan, any thoughts around that? How do we, once the opportunity comes, are we ready to grab the same?
Yeah, I mean, good point, Pratik. I agree with you. But let me also say this, that we have generally have the capacities in place. We have 300 million capacities in cables and about 100 to 110 million lamps. Whereas last year, of course, let us not, even if taking the first quarter number, we are only at about 60-65% capacity utilization across our capacities. And then we are now augmenting with some specific capacity to meet a specific requirement or a specific segment. For example, the HS1 has a shortage of capacity, so we are adding one line. And we are getting new business from Honda, so we are adding additional facility in Narsapura. So that is selective. But one thing is very clear, we have enough bandwidth to install capacity in our existing facilities because the infrastructure has been set for a higher ability to deliver or put up additional plants. So we will look as and when there is one of the things in automotive industry that if you win an order today, it is not for today, it is for a year down the line at least. So we have a fairly clear roadmap as to when we need our capacity needs to be augmented, and we work accordingly. I think, so there is enough time for us to deal with it, and there is no issue on finances. As you know, we are quite cash surplus. So we don't foresee any problem to meet these new businesses that we are going to win.
Fine. So our approach here will be once to get this order, and like you said, it will be with a 1-year timeline, and then to put up a capacity. So we are not aggressively going out and adding some huge capacity.
Yeah, I mean, one of the things that Suprajit has all historically done is that it is not that from 100 million I'll go to 200 million and wait for the order to come. We have been continuously increasing our capacities, assessing closely what is our requirement for the next 1 to 2 years. So that's what we have done when we went from 225 to 300 million. Because of the last year being COVID, it didn't utilize the capacity. So we are still reviewing very critically today to see what is required for the next 2-3 years. So we sort of look at 2-3 years in a bucket and see, when we need to enhance our capacities. And I think that has worked very well. So that it also helps us in, capital allocations in a very optimal or a very efficient way rather than just, setting up and waiting. So it has worked well, and I think it will not be a problem.
Absolutely. Fair enough, sir. Then my second question, we did a lot of cost optimization or cost cutting this year because of COVID. We have spoken at length about it in our Q1 and Q2 calls. So if you could just talk about how would this be reflected in our numbers going forward?
Yeah, I think there has been you are right. I think we have elaborated in the first couple of quarters update. But let me also tell you now there is what's happening is that the COVID scene is adding to the cost in a sense, because now we have to work on simple things like making sure that everybody is vaccinated at our cost. We are making sure that we operate with less capacity as much as possible to make sure the social distancing is maintained. And if somebody is quarantined, he is out for another 2-3 weeks time, but we still pay them. These kind of challenges, which one is the cost optimization in a pure operating situation, but then there is also parallelly cost add-on like this comes up. So, ultimately it is a question of, being most optimal in our business compared to the competition. I think that is where we feel that we are ahead of the race, and that's why we will continue to perform okay. But in terms of challenges, there are still some challenges. While some of the cost optimizations we have done last year will stand good this year, there are also some cost add-ons coming, not just because of COVID, sometimes also because of some of the cost push inflationary pressures, which is not easily transferable to customers, because customer will give you a steel price increase, but he may not give you a corrugated boxes price increase. I mean, just to give you an example, which is difficult to pass on. And those kind of things also will be there. So we have to juggle multiple balls, but I think we'll still work out, our guidance of, growing ahead of the industry and maintaining certain level of margins. I think that still stands good, I think, at this moment.
Fair enough, sir. And congratulations to you and your team for such an excellent.
Thank you.
All the best, sir.
I don't know how many questions are there on the question and answer. We'll take another 2 questions, moderator, if it is okay. Hello? Moderator? Hello? Hello? Did I lose?
No, we can hear you.
Can you hear me?
Yeah, we can hear you. We are online. I think the moderator is not able to respond.
Yes, we can hear you.
Hello? Disconnected.
Can you hear me, sir? Hello?
Yeah, what happened?
Yes, sir. The next question is from the line of Balkrishnan.
Yeah, moderator, we'll take another 2 questions. I think it's already 7:55, so another 2 questions we'll take, yeah?
Sure, sir. The next question is from the line of Rohit Balkrishnan from iTalk PMS. Please go ahead. Mr. Rohit, your line is in talk mode. Kindly go ahead with your question, please.
Yeah, hi. Am I audible?
Yes, you are.
Yeah. Congratulations to the Suprajit team for a stellar performance this year. Sir, just most of the questions have been answered. I just had 2 questions. One was, could you talk a bit about your efforts in the US markets for both Phoenix and the automotive cable business? That was question number 1. And so the question number 2 was, in continuation of the previous question that was asked slightly longer term, in terms of your growth, in terms of the next 3 to 5 years. You talked a bit about the new products, and you were also saying that probably you're quite excited about your technology center. So, I mean, any broad, I don't want numbers, but just in terms of opportunities that you see, in terms of the products that you have, in terms of what keeps you very excited on that front? What are the things that you are very excited about in that? And this, as an offshoot of this, in terms of capital allocation, you've continuously said that is a part of your growth strategy. Given what is happening in terms of diversifying supply chain and overall markets being quite volatile, just want to understand, is there any merit in going a bit aggressive there? These were the 2-3 questions that I have. Thank you.
About our business in US, both for Phoenix and automotive, I'll ask Mohan to answer how it is panning out. Mohan?
Yes, sure. I'll take that. Let me start with the lighting or the bulbs area. That's a very huge market over there, and we have been trying to knock into that market. And very recently, we have had very successful, I would say, audits by some of the US customers of our plants, and the audit reports have gone. But again, due to cold restrictions, the whole transaction has not been very smooth because they had to ask somebody in India to come and do the audit for us, for them rather. And that has been very successful. So we are in the process of getting into it, of penetrating into the US market. Moving over to the automotive, as you know that almost about close to 5-6 years back, we got one gentleman out there to specifically look into the automotive market. And even I have been there many times knocking the doors of many tier ones and the OEMs. And that has been successful, and that's the reason we have got some amount of success over there. Moving forward with Jim coming on board and with his contacts and networking, and I'm sure that that will get even more, I would say, accentuated along with Gopal, who has been doing this job. Therefore, we are pretty much gung-ho on our penetration into the US market.
On the other 2 points that on STC, I think it's difficult to say which product will really click. As Mohan has explained, at least 3 or 4 products are under OEM, what I would call as approval phase, and hopefully in the next 3-6 months' time there will be a decent development. The market size of them are quite large, but then giving a market size and hoping that we'll get 10% in the next 2 years, I think it would be a little bit over-optimistic statement. So we do not want to comment. I think things like electronic throttle controls or the gearboxes we are developing or the ABS, CBS product that we are planning to launch, or even quite a few of the other things that we are doing. They are all very exciting products to us. So we are working closely. It is something that we started 2-3 years ago. It has come to some stage where we are now being noticed by the customer. The approval will take some time. And so telling that we'll do 50 crores, 25 crores, 100 crores would be a little premature for us. But then we are quite happy with the progress so far. I would leave it there. In terms of capital allocation, I continue to believe that consolidation of auto component manufacturers is a given issue. I think it will be there. There is no place for, let us say, cable maker making $25 million USD or only focused in US. It will not work simply because today any product launched by, let us say, a GM or a Volkswagen or whoever it is, it's a global platform. So the supplier should have the ability to really reach out to customer in all these markets. And that very few of us have that ability. So such suppliers will eventually either get acquired or will fold up. And it has happened already in this business. So we are looking at opportunities, and I think, some of the capital allocations will go in such opportunistic, players who will give us either a geographic fit or a manufacturing footprint or new customers or, a combination of these. And that's part of our strategy anyway. Thank you.
Thank you.
One last question, moderator, if it is there.
Thank you. We take the last question from the line of Saket Kapoor from Kapoor Company. Please go ahead.
Yeah, Dhanyavad sir. Thank you for the opportunity. Sir, if we take the comparison of our performance from December to the March quarter, that is the preceding quarter, therein only we have seen a dip in the revenue and both the top line and the bottom line. So how would you explain this? What factors attributed to this sequential decline?
See, I think, the automotive industry itself is cyclical, you must realize. Typically, the third quarter is the best quarter because that's where the most of the festival season is. Both the OEMs do well, and beyond that, the aftermarket also does well. So October, from September to November are the peak months of festival in India. So which is not there in the last quarter typically. So also we have a lot of aftermarket schemes which sort of end in December, etc., so that we sort of strategically position it. So that's all the reason why Q3 number has been higher. Whereas on the consolidated basis, I think it's it's still the highest because our subsidiaries did much better in the Q4, which are typically overseas contacts. So for them, it's a different situation. So typically in automotive, Q1 is the worst quarter, and Q2 and Q3 sort of gather speed, and Q4 sometimes is same, sometimes slightly lower than Q3. This is historically how it is actually.
Right, sir. Sir, last year we have also, last February, where the board approved this buyback part also, sir, at 20 rupees per share. And sir, now since SEBI has also come up with a suggestion paper of, in fact, the dividend distribution policy to be mandated by the top, say, 1,000 companies, something of that sort. Sir, what should be the ideally investors should be looking in terms of this buyback and the dividend part? Buyback being now also being taxed at 20% and dividend being taxed at the hand of recipient. So what is the way forward for your investors?
Okay, I think we made a small commentary on this in the last quarter business update as well as in the call. I think what the board has decided, not in this board meeting, in the previous board meeting itself, was that typically Suprajit has been distributing between 20 to 30% of the net profit to the shareholders. That has been the historic number. The historic average has been about 23-24%. So in that last board meeting in February, the board took a decision that we have been only doing dividend distribution, and as a part of broad basing our distribution policy, we should also start doing the buybacks. The reasoning being simple that these are the two ways of rewarding the shareholders, and let us do it both ways. And also that we should increase our distribution on an overall basis over a period of time. So buybacks probably will not be happening every year, but if you look at a 3-year perspective, as a matter of argument, there is no board mandate to this, but let's assume you do one buyback once in 2 or 3 years. If you look at the 3-year block, the distribution that Suprajit will do between buyback and dividend distribution should go from 20 to 30% to 30 to 40%. That was the decision that has been taken by the board, and this is what I explained in the last con call also. So we will be working on that premise going forward.
So since you articulated that the entire ecosystem has been disturbed by the second unfortunate COVID wave, so sir, as this same recedes, so what factors actually we investors should look forward that will start again the journey where the way it started in the second quarter last year? What are the factors that we should look forward?
In terms of how we will repeat last year?
Yes, sir.
Q4?
Yes, sir.
How will we be able to redo what we did last year, 3 quarters?
Yes, sir. You told that this will be different than what it was last time, and it's very true in your assessment.
Last year, after the lockdown, there was technically not much of any disturbance. It was an open market in India, and, world was generally okay anyway. Whereas this year, we are still not through the second wave. We are still struggling. The death rates are high. And the challenge is whether the third wave will be, and if it comes, how bad it will be. Correct. Typically, with no protection in place, I would still think that 10% or 15% or 20% one shot is not good enough for us. And this time it has gone to the rural areas. So, there is a little bit of uncertainty compared to last year. But I am hoping that if a good amount of vaccination happens in the next 3 months, the third wave may be reasonable, may not be too bad. But will the third wave come? My view is it will come. How bad it is, I don't know. I'm not a medical expert. So if those things do not lead to shutdowns of plants and lockdowns of towns and cities, I think we should be okay. actually. We do believe that there is an underlying demand. But if that happens, then ultimately it is a question of confidence of people also. Today, if there is somebody, in the household, somebody is already had a COVID and his uncles, aunts and brothers and sisters had it, the discretionary spending will come down. That is what I am worried. Last year it didn't because rural area was solidly supporting. This year rural area is also, is affected. So it's a very difficult judgment. I don't know. I am hoping that it won't be bad and it will be back to normal. But, we all have to be mindful of the possible dangers. Yes, I think it's a very generic answer, so I can't answer any better, I think.
Definitely. The last point was that this year, I think so, the second wave and its harmful impact is domestically only. I think so. The globally things are very different than what
Agree with you. I think globally we are better off, but let me understand that globally right now there is a different problem. The IC chips problem is a problem.
Right, sir.
Let us face it. I think automotive industry in calendar this year will do less than last year calendar in terms of volumes, because that IC chip shortage is not going away. Today, if I place a new order for IC, it is 36 weeks delivery. So where do you go? So that problem will bring down the volumes in automotive. But having said that, we have one new businesses, so we will grow. My only I would just summarize saying that yes, these are all the challenges, but we will outbid the market, whatever it is. How the market will grow, we are all waiting and watching.
Yes. So thank you for all your elaborate.
Thank you very much.
Thank you for that.
Thank you. I think I would like to say that thank you very much for all of you for your continued interest in Suprajit. Our team has been working tirelessly. We have a two-pronged challenge today. One is to try to excel operationally, but at the same time manage the COVID situation. The team is doing a great job, and we really appreciate all the good words which we'll pass on to our team. And as usual, we'll work towards making sure that we come out with, as good results as we can under these circumstances. And we appreciate your continued interest in Suprajit. Thank you very much and have a good day.
Thank you. Ladies and gentlemen, on behalf of Anand Rathi Share and Stock Brokers, that concludes this conference. We thank you all for joining us, and you may now disconnect your lines.
Thank you.